Hello traders, this is Dave with the Compass Options Trading Room, and wanted to do a weekly Periscope video. Going to cover some May and June trades and talk a little bit about the market and where we think it might be going or where it's been, and just get set up for the next week's worth of trading. So let's get started on this. Again, we have to start with the disclaimer. All signals and trading opportunities provided here for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right, let's just kind of recap where we've been in May and June. These are the recent May trades. I think everybody's familiar with these. We had this nice Microsoft weekly ATM for 40% gain. In May, we took a big loss in Twilio, also Etsy, Alta, and Texas Instruments, but overall, we had a pretty good month. In May, we had 37 wins, 7 losses, 85% win rate. April, 35 wins, 5 losses, 89% win rate. So that kind of brings us up through May. Now, in June, we've had a pretty good month in June. So far in June, we've had 29 wins and 3 losses, a 91% win rate. We've still got a few trades on, and we'll see how those work out this week. But again, so this April, this May, and June so far, 29 wins, 3 losses, 91% win rate. We also wrapped up an Apple weekly ATM, and that produced $290 profit per contract. Normal setup on that, if you invested about 2,000, was 5 contracts, so that was good for close to $1,500 in profit on that one. And we had some nice wins here on PNW. This was a very short-lived trade. Made a quick 30% on that. We had a nice 45% on a call debit spread on AVGO, Broadcom. A nice 40% gain with GME on a time spread. So pretty good month in June. We did have this Planet Fitness that turned on us. We were trading in short. It was difficult to trade shorts in June because the market was pretty bullish. But it was bearish when we took it, and it reversed on us, so we had to take a loss on it. So anyway, that's kind of a recap of the recent May and June trades. The Microsoft weekly ATM, I just go over this. This was the one we did before we did one on Apple, but just to show how this works. Again, basically what we do is we sell weekly puts and buy a much longer term dated long put. So on May 5th, we sold the 512 310 puts and bought the 721 305 puts. So we had about a $5 spread between the two. This was a weekly put, and this was out to July 21st. And we got a $403 credit on the 310 puts, and we paid $1062 debit for the 721. So we had a net debit when we entered the trade of $659. And then we just sold puts. On the May 12th, a week later, we bought back the 310 puts that we had for $1.69 debit, and we sold the 519s, 310 puts again. We're using 310 puts for $414 credit, so we netted $245 credit on that. And then on May 18th, this was the Thursday, because the stock had moved up so much, we bought back the 519 310 puts that we just sold here previous week, and it only cost us 27 cents. And we sold the 526s, the 315s, which was $5 higher now, for 319 credit. That gave us a net credit of 292 when we did that trade, because notice that we sold these for $414, bought them back for $27. So big gain there. And then on May 18th, the same day, Microsoft moved up pretty strong. So we actually bought back the puts that we had just sold for $319. We just bought them back that afternoon for $207. So we made $112 profit on those puts in just a couple of hours. And at that point in time, because Microsoft was moving up so fast, we also sold the protective puts, the July 21st puts, to close out the trade. And we had a net credit of $345 when we did that, for a net of the trade of $223 per contract. And that's how these weekly ATMs work. You're just selling weekly puts against a longer dated long put to give you protection and to control your margin. So you want to try to, in this case, we had $5 between the two strikes, so we only had $500 risk on the trade. All right, so I just wanted to recap, and again, I just kind of want people to see where we've been for this whole year so far. You can see here, January 87% win rate, February 75% win rate, our worst month. March 83, April 89, and May 85. And this is what up through May, this is what our profits and losses were. We had $8,450 profit in January. February we lost $1,785. That's our only losing month in 18 months. And March we had a $79.30 profit. April $47.40 profit. And in May $67.82 profit for $26,117 from January through May. Now in April and May we had a pretty good run here. This is from March, April, May, and June. So this is starting from March and going through June to tell you what we've done in these 4 months basically. And again, this is investing $2,000 in each trade. So and again, March we had 37 wins, 6 losses, 86% win rate. April 87.5% win rate. Notice the win rate was higher in April, but the profit was lower, because we had to take smaller profits and we had a couple of losses and they were pretty large. So that knocked our profits down. In May, we had 41 wins and 6 losses. Again, 87.5% win rate, 76.62, pretty nice. And in June so far, 29 wins, 3 losses, 91% win rate, and about $8,421 in profit. So for March, April, May, and June, so for these 4 months, up about close to $30,000 if you put $2,000 into each trade in the room. Pretty nice. I mean, this is what we expect to try to do between 85 and 90% win rate, and I think this is a really good record. So let's talk a little bit about highest probability trade setups and entry criteria for anybody who's fairly new to the room. We use the dominator signals and the compass signals. The compass system is our system that lets us know when institutions are in the trades, and the dominator lets us know when the market internals are in our favor. So, and I'll show you a couple of those in a little bit. Again, key thing here is to, when you find a high probability trade, you want to try to buy at support and sell at resistance, being something a support or resistance level would be like the volume weighted average price, the 15 EMA, a dynamic compression, etc. Some good solid support or resistance level, so you're getting in at a good level. You also can look to see if there's a Heikin-Achi reversal candle, either bullish for a long or bearish for a short when you're trying to get into the trade. That also gives you a higher probability. Obviously, we want to trade in the same direction as the stock's current trend. Only going to trade stocks long that are green for the day. Only going to trade stocks short that are red for the day. And we also want to take a breakout in the same direction as the current market trend if there is a trend. So if we've got a trending market to the bullish side, trending up, we want to go with long trades. And if it's trending down, we want to go with short trades. And again, we want the modified Laguerre, basically the momentum indicator on the compass system for the current time frame and for the multi-time frame. We want those to match. They either be blue or green for bullish, red or yellow for bearish. Those things need to line up. And you also want to select stocks that have relative strength or relative weakness versus a SPY. Not RSI, but a stock that is moving up faster than the SPY is moving up, or moving down faster than the SPY is moving down. So if you've got the SPY is just moving sideways, and you get a stock that's green and moving up, that's going to have relative strength. And if it's going to be a swing trade, in fact, if it's any trade, you really want the daily chart to match the direction as well. So if you're getting into what you think is an intraday trade off of a 5-minute candle or a 5-minute chart, you also want the daily chart to line up in the same direction. So long trades on intraday trades should only be taken if the daily chart is also bullish, and short trade should also only be taken if the stock is bearish on the daily, because you want to be able to stay in the trade longer if it goes against you, and even hold it overnight. And you certainly can't hold it overnight if the daily chart is bearish and you're trying to trade it long. And again, the pop out of the box signal adds conviction to the trade. We'll talk about that. And have patience. Patience is really important. You know, patience is part of a good solid strategy, because you're waiting and waiting for the stock to come to you, so that you're only going to grab the highest probability trades when they give you the best entry. And that's really important. Patience is is basically a part of the methodology that you need to be able to be successful. Otherwise, you're going to be chasing trades or putting trades on just because you want to trade. And we don't trade, our objective is not to make trades. Our objective is to make money. We do that by making trades, but only with the highest probability trade setups. So that's and again, I have videos on all of these. If you're new, you get access to the video library. There's a video on there on finding the highest probability trade setups using the compass system and using the compass system and dominator combined, what the compass indicators mean and how we use them. There's also a video on Fibonacci candles, how you use them and how you trade with them, and also in all of our strategies that we use. There's one on doing time spreads over earnings. There's one on weekly ATMs that we just mentioned here a little while ago. There's one on doing debit spreads with weekly expirations, and there's one on doing put credit spreads. So all of that is laid out and in videos. They're relatively short, 30 minutes or so, and all that is educational information for everybody. All right, so we want to just kind of look at some charts for anybody who hasn't seen it. This is the compass system. This is a daily chart. The compass system runs on Thinkorswim. This is ABBV. This is a stock we took for a trade. You can see all of the green over here telling you that the institutions are in here buying. When you've got green on the multi-time frame, this one here, green in the current time frame, this one here. When those momentum indicators are both green, and then you even have greens on this quant line, then you know that you've got a really good bullish trade. So you want to take a look at that and say, okay, this is a good trade. Now I want to show you on TC2000, which is another charting program I use, where I can put more indicators on there without cluttering the TOS chart up. But this is what's called an algo resistance line that I draw. This is what the institutions' algos use. They look to connect these specific candles together, and you can see that it broke right through here. See how ABBV broke out. So if we look at what it looked like here, see how it's breaking out and it's got all green, and we look at it here, we can see that that's a really good entry. We did take it and we did make money on that trade. Now I've got some 3 SPY charts. This is SPY charts going back in time a little bit here. Notice this is 317. This is March 17th. See, the SPY was starting to break out here, starting to break above the high of the year line right there. Then we switched over here. This was, I think, 417. It was still moved up. This is a week later, and it came right up to this algo line right here and poked right up to it at about 430, and then pulled back a little bit. And this is where we are right now. You notice we pulled up, we got through that line, we created another high. It popped up to that high. Here's that algo line we were looking at here. But notice now it's pulled back, and it's pulled back with some decent force. We've gone below this 8 exponential moving average right here. You notice how this has been sloping up for a good long time, and now it's flat. So we'll see what happens this week, but this is where we ended up on Friday. And that's a little bit of a pullback. We got to see now, are we going to reverse and head back up again? Or are we going to start heading back down again? Because we basically have been creating higher highs and higher lows for a while now. So this is, it looks like the market's trying to break the back of the bear market. What we'll see, because that's not what we want to see right there. All right, so this is again, this is just for anybody who hasn't seen some of these charts. This is GDX. This is a gold trade that we took, and you can see how everything went green here. This is actually where we would take it right here off this green line right here is a 15 EMA. It went from red to green. These pink arrows that pop out of the box signals, which is telling us that we're coming out of compression. And when all of this goes to green, the multi-time frame and current time frame momentum goes to green, you can grab the trade right there and head out. And if you're a little bit more aggressive, you can actually do it as soon as you go to a 5-minute blue off of a red here on the current time frame. Right there, you could have grabbed it right there as well. But if you're more conservative, this is where you would take it. And it moves up pretty nicely. And when you start getting a momentum loss like that, you get out and you notice it went back to yellow on the current time frame. You'd be out of the trade. So that's on GDX. Just some samples of what we trade. This is Tesla, one that I always keep up here because I like to show this is what a Fibonacci reversal looks like. You go from candlesticks that have wicks and tails like this, especially tails, and then you go to a flat bottom candle, and you notice all these candles on Tesla all the way up at flat bottoms. This is a Heikin-Achi candle configuration. And when you get a Heikin-Achi reversal like that, it's a very good entry. And you notice that we were green across the board here. The institutions were buying Tesla. I mean, wasn't any question about it. It's just a matter of picking the right entry to get in. And right here was a perfect spot because it came out of compression. You get a pop out of the box signal. You've got a Heikin-Achi reversal candle because you have a flat bottom after a tail on the bottom. So boom, and it goes right up. And you can just see how nicely this moved up. And this is where we get out. And we could have stayed in, but we're losing some momentum on a candle like that. And this is a short on the SPY. This is a little different configuration of TOS. This is a chart that I have that has this is the current time frame momentum right here, the Laguerre, the current time frame momentum. This is the bandwidth, Bollinger bandwidth, so it tells me when the bandwidth is expanding, which tells me the stock is breaking out of compression. And then I've got the candlesticks up here, and here's where you would buy this. You see this, see the wick in the tail right here? You see the flat top? That's a Heikin-Achi reversal on the SPY to the bearish side. This is where you would take the trade, and then you would ride it down until you start to get these the wicks on the top of the candles. Time to get out. And notice they've gone to no flat tops anymore. Momentum's waning. The bandwidth is coming back in again to show you compression. You take your profits right here. Now, and this is another one in SPY just to show you a little bit of another break. This was another short, and you can see that this pink line here is the volume weighted average price. And you typically don't want to short anything until it gets below there. But right here on this candle, where I get this blue pop out of the box signal, you see that the candlestick here broke below the VWAP, the red line. And you notice we went to a flat top. This is a Heikin-Achi reversal to a flat top. So this is where you get in. And at the same time that this candle is being created, we went from blue to yellow. We went from bullish to bearish on the institutions, and they were already red on the multi-time frame. So you know the institutions are selling here, and this just confirms selling on the current time frame. You get in right here and ride this thing down until you start to get flat again. So as you get these little candles, you get out. You see it turn back to blue over here a little later, but you're out of the trade by the time you lose momentum here. So that's how we follow that. This is QSR. This is one that we took a while back. This is the daily chart in QSR. It came out of what's called a dynamic compression zone, this little shaded area, popped up nicely, obviously very bullish. The institutions are buying this on the daily, no question. So then we got to look at where we want to get in on a 5-minute chart once we know that it's bullish on the daily. And we wait for the stock to compress. It rides along the 15 EMA. Meanwhile, we're watching the compass system down here to see what we get. Now we went from blue to green. You could have red to blue. You could actually get in right here as it broke. But what I did was I waited until I got a pop out of the box signal as well off of the 15 EMA, and then I get in. And it was still blue. Now, notice we went to a yellow candle here, but then it went right back to green again, and there'd be no reason to get out based on this is just compression, and then boom. So if you were waiting, this is where you could have got in and rode this thing all the way up, and of course you're out as it went back to yellow again because it's flattening out. But you've taken your profits in here already. That's QSR, and this is QSR. Now notice QSR. Notice that the big break here is right at 11:30. Right there at 11:30 in the morning. So this is the dominator system. This is telling us what the market internals are doing, which means how many stocks are moving up and up volume and up ticks versus how many stocks are moving down on down volume and down ticks. And what's the background look like? The background on QSR was dark green. That's a bullish multi-time frame trend. So we know the stock is bullish. We knew that from the compass system. So where is the ideal place to get into this? Well, you didn't get any buy signals to way up here, but we didn't have any sell signals, and we took it right here, right off of this compression. See with this green, with this move right here, because there was still some red mixed in, but there wasn't enough market internals to tell you that it was bearish. It just wasn't overly bullish yet. But the stock was bullish, the background was bullish, and the compass system was bullish. The compass system was all green. So once we moved in right here, it moved up beautifully. And if you were very conservative, you could have waited till you get the buy signal and then get in. and ride this thing up. And it basically was strong most of the day. Yeah, you probably get out when it's up here because it's really not going anywhere. It's still bullish, but it's just not going anywhere. So that's how we use the dominator system with the compass system after we've looked at the daily chart to get our pick. And here's a SPY trade that we took. Again, bearish right here, pig background, bearish multi-time trend on the SPY. We get sell signals, sell signal here, sell signal here. This is where I would take it. Right here as the SPY breaks below this red line, which was a 15 EMA, and then you just write it down for 3 candles, and then you start getting chopped, you get out. This is a pretty quick trade, but I mean, it's going to make you some good money on a move down like that on the SPY. You have to be nimble when you're trading the SPY. ENPH, this was a short we took. It's off the daily. We took this overnight. You can see this dynamic compression zone, the shaded area here. You notice that everything went from everything right here in this candle. We had yellow or red on all the way up and down, except for the bias. But this one turns much later. I focus mostly on these two right here. So when it went yellow, and this was already yellow, this is where your entry would be. And then we wrote it down for a couple of days on ENPH. And then it kind of compressed and we get out. But you could have stayed right in it because notice it stayed yellow or red on the daily all the way through. Another nice trade in Tesla. And I just want to, this is to introduce some folks who may be not familiar with the compass system or the dominator system, what it looks like and how we use it and how we were able to find these high probability trades. I mean, it's really important to know that you only want to be in trades when the institutions are in there. You don't want to be trading stocks that the retail traders are trading. It's suicide. There's just going to be nothing but chop and chaos. You want to be in there when the institutions come in. Now here's a pop out of the box signal on Tesla. You see how we've gone to blue to yellow right here? So right here when it comes off the 15, this is a perfect entry for it. Perfect entry right near it. Again, sell at resistance. It's right at resistance. It's right at the 15. You buy it here. You buy your puts here. You write it down. It kind of compresses, but notice everything's staying red. No reason to get out, and then boom, it moves down again. Compresses aside, moves down again, and this is where I want to get out right here as it starts to move. But you obviously want to be out when it goes back to blue. But that's a nice trade on the 5-minute chart on Tesla short. KHC, this is one we took long. We took it right here off of this pop out of the box signal with a dynamic compression zone. We held it overnight. It didn't do anything the next day, but we were still green. The compass system was telling us the institutions are still buying it, and boom, it popped up on a gap up the next day, and we took profits right on that move up. And again, everything was green. No reason to get out on this day right here, even though it didn't do anything and it was red. The compass system was telling us institutions were still in there buying. And STZ, another good one. And just so you can see this compass system, here it is coming out of the pop out of the box. Big red candle to the downside. This went from blue to red. A nice entry for this one, and we traded it. We day traded this thing. UNH, another nice one. Pop out of the box signal to the downside. Went from blue to yellow on the multi-time frame, the current time frame momentum. So that was bearish momentum. We already had bearishness on the multi-time frame. Enter right here, and we just kept this overnight. One night, rode this thing down. That was a pretty nice move. It dropped down from about 520 to about 504. So pretty nice move on UNH to the downside. Dollar General, this was another nice trade we had. Again, this was a 5-minute chart. Again, you can see what we're looking for here. We got blue. We don't want to be going short. We're going to trade the stock short because it's bearish for the day and it's below the VWAP, but you got to wait for your time. And right here, when it went from blue to yellow, and you get a pop out of the box signal right below the volume weighted average price, that's resistance. We're buying at resistance. This is where you get in, and then you can just ride this thing all the way down. It stays red all the way down to the to 1140 and even beyond. So this was a nice trade. And again, you're going to get some chop in here, but you want to keep an eye on your multi-time frame and current time frame. Look at it. This tells you, even though the stock was trying to bounce back up, this is most likely just retail traders trying to pick a bottom and getting burned as the institutions were still in there selling, and down it went again. All right, so that's the kind of the charts. I always go over this. This is using the compass and dominator system together. Obviously, you can use the compass system without the dominator, especially if the dominator is neutral. You just don't want to be going long a stock on compass if the dominator is red, because you're trading against the market when that happens. But if the dominator is neutral or in your favor, then you're going to have a much higher probability trades by going bullish when the dominator has a background is green and it has a buy signal. That's a very bullish market internals. And just the opposite, background red, sell signals, that's a bearish dominator signals. Then you just align that with your compass system. So when the dominator is bullish, you want to be looking for bullish compass system trades. When it's red or bearish, you want to have short or be looking for puts on red compass system stocks. And it's also, it can take larger size and stay in trades longer when you've got a dominator system and the compass system lined up together. That gives you the maximum, the highest probability trade. What you're doing at that point in time is you're trading with the institutions when the institutions are going long, for example, and when the market's also long. Market internals are also bullish. You've got the wind at your back and you've got the institutions in there buying. You're likely to get a better trade out of that. So you can usually take larger size. But again, it's very important to understand what the market's been doing that day. If it's a choppy market, even though the compass goes green and the dominator goes green, that may just be a temporary thing if the market's been choppy. If it's in a trend, then then it's beautiful. It's a good time to get in and takes a little bit larger size. And obviously, the best entries for trades are always off of support and resistance, which is either the 15 EMA, a VWAP, a pivot point, out of dynamic compression, some significant support or resistance level. And I like to just emphasize this for new people. This is what the Compass Options Trading Room goals are. We want to help members become consistently profitable traders under all market conditions. We had a bear market from January 2022 up until just recently, and that was a tough market to trade. But we made money in just about every single month except February because we're only taking high probability trade setups. I want to teach the members the most effective uses of the compass and dominator systems, how to use them most effectively to find the highest probability trade setups. Educate members on identifying and trading the highest probability trade setups while being patient. This is really important. A lot of times people will tell me, we'll go 2 hours and I haven't taken a trade and the market's looking great and everybody wants to jump into some trade, but we're not finding the highest probability trade setup. You end up being, it's a FOMO, it's a fear of missing out on trades, and you can really hurt yourself doing that by chasing because you're not getting in a support or resistance, you're just getting in because you don't want to miss out on something, and a lot of times as soon as you do that, it reverses on you. So, and we want to accomplish these goals in a relatively low stress and disciplined environment. And this is to me, this is a key. If you're going to be a successful trader, consistently profitable, you can't be trading in a very high stress environment where you've got adrenaline rushing all the time as you're chasing stocks up and down and basically too much emotion. You can't. That's not sustainable. You don't want to be trading with a bottle of antacid sitting next to your desk to try to keep it from getting too upset. So we want to trade in relatively low stress and disciplined environment. And so again, a lot of times it seems like we're not taking the trades we should take. This is the reason. We don't want to jump into things that we shouldn't get in. You got to force yourself to be patient. This was our 2022 performance recap. You can look that over. This is going back to a year ago. We've gone another 6 months since then. So we had some rooms. We had some trades with. I used the compass system only from October 3rd through 12/31. This is when we actually had the dominator system came on board in October. So what I did was I looked at the trades that I took that used the compass system, but didn't use the dominator system because the dominator system was neutral at the time. In other words, it wasn't going against me, but when I took a bullish trade on the compass system, the dominator system was neutral. It wasn't bearish, but it wasn't bullish. And we had a 8.4% win rate, 135 wins, 14 losses, profit factor 3.57. Then when I traded the trades I took when the compass system was like when institutions were in there, and the dominator was also giving us buy signals or sell signals. So these trades had the compass and dominator systems combined were lined up. And we did 123 trades. We had 119 wins. So fewer trades, obviously. A huge win rate of 96.7%, astronomical win rate. Very unlikely to be able to maintain that over a long period of time, but we did that for 3 months. Profit factor 12.41, really, really high. And I also was testing out the SPY super system. The SPY super system is really just trading the SPYs or the Qs when the compass system and dominator system are lined up and you get it at a support or resistance level. And we did 100 trades, 86% win rate, 10 losses. But the profit factor was higher. It was 14.17, meaning that we had smaller losses in the SPY and some bigger gains in the SPY when we were trading that. But this is a trade you've got to be, you have to be, trading indexes is much harder than trading stocks because you don't have any relative strength or relative weakness to lean on. But I know a lot of people want to trade the SPYs and the Qs, trade the indexes. So I actually did a SPY super system video on how to do that using the compass and dominator systems that you have access to if you're interested in trading the indexes. And this is put credit spreads. This is debit spreads. Those are just connections to the links to the Fibonacci candles. There's actually a video on that now. And here's a link to my video library. And here's the stocks that I'm looking at. One thing I wanted to show you on these, let me just show you something. This is one that BIG, this is TC2000 on BIG. You see this, this is the candle here from Friday. You see this flat candle and this blue. This tells me the Bollinger Bands are expanding and we went to a Fibonacci reversal. These are Fibonacci candles right here. Fibonacci reversal right here. And if you go back and look at this, you'll notice how we had Fibonacci reversal candle here to the downside. See, we had multiple days to the downside, and then we get a Fibonacci reversal to the upside right here. And you see how it followed through on it. So that's what I'm looking for on big, looking for it to follow through. I think also we're in Amazon. Let me show you Amazon. We are in Amazon right now, and that's one of the trades we're in. And you can see what a nice setup this is on Amazon. Again, it was moving sideways. Friday was a Fibonacci reversal. See the little tail here on the candle? See the flat bottom? It's a Fibonacci reversal. The blue candle tells me that the Bollinger Bands are expanding, and we're in Amazon, and this is really a nice setup on Amazon. A really nice setup. I like it. You know, there's no guarantee it could turn around and go against us, but I just want to show you what I'm looking at. I'm also have Apple on that list. It's Apple. I'm gonna look for the same thing. Daily chart on Apple. Here's a tail, flat bottom. It's a Fibonacci reversal on Apple to the upside. Now I don't have a blue candle here. I'd much prefer with a blue candle, but we got a Fibonacci reversal right here on Apple. See this flat bottom, and then we went to blue, flat bottom, little tail, flat bottom, flat bottom. A nice move up. I'm looking for the same kind of action on Apple. So that just kind of shows you some of what I was looking for on some of these stocks. I'll show you Wendy's to the short side. Here's Wendy's to the short side. Pretty easy to see the Fibonacci reversal here on Wendy's. Flat here, wick and a tail, flat and pop. This is it's a big move down. It's very similar to what we had here when it moved down, and it moved down pretty hard. And if I switch over to the regular chart, not the Fibonacci, you see it's broken below the 200-day moving average, which is this purple line. It broke this algo resistance line. It's pretty set up for short, but you wouldn't want to be going short this trade until it breaks Friday's low. And that's what I say here right here on the entry criteria. When you look for longs to break over Friday's high with a high probability trade setup, look for shorts to break below Friday's low with a high probability trade setup, and take trades that are trading with the market trend if there is a market trend. All right, so that covers the Periscope video for this week with a little bit of a recap. That was fairly long, but I just kind of wanted to cover some of those things, and I hope everybody has a great week trading.